Ladies and gentlemen, welcome to quarter for FY22 earnings conference call of AUROBINDO Pharma Limited. All participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. In order to ask questions, please signal by using the raise hand icon on the bottom of your screen. I now hand the conference over to Ms. Dipti Thakur. Thank you, and over to you.
Thank you, Aditya. Good morning and a warm welcome to our fourth quarter FY22 earnings calls. I am Dipti Thakur from the Investor Relations team. We hope you have received the quarter for FY22 financials and the press release that we were sent out yesterday. These are also available on our website. I would like to introduce my senior management team today on the call with us, represented by Mr. P.V. Ramprasad Reddy, Chairman, Aurobindo Pharma USA, Mr. K. Nityananda Reddy, Vice Chairman and Managing Director of AUROBINDO Pharma Limited, Mr. Santanam Subramaniam, CFO, Mr. Yugandhar Puvala, CEO of UGA Pharma Specialities Limited, and Dr. Satkarni Makapati, CEO of Aurobindo's Biosimilars, Vaccines and Peptide businesses. We will begin the call with the summary highlights from the management, followed by an interactive Q&A session. Please note that some of the matters we will discuss today are forward-looking, including and without limitations, statements relating to the implementation of the strategic actions and other affirmations on our future business development and commercial performance. While these forward-looking statements exemplify our judgment and future expectations concerning the development of our business, a number of risks, uncertainties and other important factors may cause actual development and result vary materially from our expectations. Aurobindo Pharma undertakes no obligations to publicly revise any forward-looking statements to reflect future events or circumstances. With that, I would hand over the call to Mr. Santanam Subramaniam for the highlights. Over to you, sir.
Thank you, Dipti. Good morning and welcome to all of you for joining this earnings call. This year has been very challenging due to various factors, namely COVID, steep crude price increases, global inflation and second half geopolitical issues, etc. Despite these issues, we have delivered a good set of results in this fiscal year. We will now discuss the results for the fourth quarter of fiscal year FY22 declared by the company. We'll be discussing ex-natural numbers throughout the call. For Q4, the company registered a revenue of 5,809 crores with a decrease of 3.2% quarter on quarter. The EBITDA before forex and other income declined by 23.6% year on year and declined by 4% quarter on quarter to rupees 974.74 crores. EBITDA margin for the quarter was 16.8% and for the year 22% was for FY22 was at 18.7%. However, EBITDA margin before R&D is 24.2% for the quarter against 23.5% of last quarter. Net profit decreased by 28.1% year on year and 4.7% quarter on quarter to rupees 576 crores. In terms of the business breakdown, formulation business in Q4 FY22 witnessed a decline of 1.9% quarter on quarter to 4,896 crores and contributed around 84% of the total revenue. API business contributed around 16% and clocked a revenue of rupees 913 crore for the quarter, registering a growth of 15% on a Y-on-Y basis, led by improved demand for some of our key products and decline of 9.6% quarter on quarter. For the quarter, the revenue from the US formulation decreased by 4.5% year on year to rupees 2,728 crores and 0.6% quarter on quarter. US revenue during the quarter is $363 million in absolute terms. We have received final approval for 3 ANDAs and launched 4 products in the quarter under review. We have filed 14 ANDAs, including 3 injectables during the quarter. The total number of filings end of March 22 is 727. Revenue of Aurobindo USA, the company marketing oral products, has decreased by 5% year on year for the quarter. Revenue of AUROMEDIX, the injectable business, increased by 4% year on year to $70 million for the quarter. We have a total of 175 injectable ANDA filings as on 31st March 22, out of which 119 have received final approval and the balance 56 are under review or have tentative approval. The company as on 31st March 22 has 720 27 ANDAs with the US FDA on a cumulative basis, out of which 505 have final approval and 33 have tentative approvals, including 8 ANDAs which are tentatively approved under PEPFAR, and the balance 189 ANDAs are under review. For the quarter, European formulation revenues clocked rupees 1,541 crores, a decrease of 0.8% year-on-year growth. For the quarter, the growth market witnessed a growth of 28% year-on-year to rupees 391 crores. For the quarter, ARV business registered a 51.5% growth quarter-on-quarter at rupees 236 crores, a degrowth of 52% Y-on-Y on a high base of last year. R&D expenditure is at 431 crores during the quarter, which is 7.4% of the revenue. The average raw material cost increased by about 9% during the quarter, and the freight costs are more than 10% on year-on-quarter. The average raw material cost increased by 18% year as a whole, and the freight cost by 42%. Net organic capex for the quarter is around $65 million. The average forex rate is rupees 75.09 in Q4 FY22 and 74.82 in Q3 FY22. The average finance cost is at 0.8%, mainly due to availing multiple currency loans. The business generated a free cash flow of $38 million during this quarter. The net working capital for the quarter has been reduced by about $98 million and $126 million for the year, mainly due to reduction in inventory. Inventory alone we have reduced by $200 million for the year. As a result of the strong cash flow generated during the quarter, the net cash position, including investments at the end of March 22, improved to $333 million. With this, we will be funding the PLI-1 project mostly out of internal accruals. Also, we reduced the gross debt significantly, $313 million from $499 million in December 21. We have been reducing the gross debt quarter on quarter and will continue to do so. In nutshell, despite the hostile global environment and peak R&D expenditure, we were able to maintain our margin and also generated significant cash for future projects. This is all from our end, and we are happy to take your questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may raise the hand icon on the bottom of your screen. Once your name has been announced, you will be unmuted and you can ask the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from Nimish Patel.
Hi, can you hear my voice?
Yes.
Yeah, thank you for taking my question. Sir, my question is, what is your guidance for the future? Does it remain intact? I mean, or is there any change, or what is basically your guidance for the future?
Subbu.
Yeah, as a policy, we don't give any guidance, Nimish. However, while the detailed questions are being asked, we'll try to give the direction as and when it is required.
Okay, sir. Thank you.
Next question is from Neha Manpuria.
Yeah, thank you for taking my question. So my first question is on the gross margins. We've seen quite a bit of improvement quarter on quarter, despite the fact that some of our lower margin businesses have done well in this quarter, and the oral solid business has, sort of deteriorated. So if you could give us some color on the gross margin trends, and is the full impact of the cost inflation that we are seeing factored into this quarter? You expect this to moderate going forward?
So, last quarter itself, we have answered this query. When we had 54.3% last year gross margin, it is mainly on account of the business mix skewed towards API in a significant manner, by which around 1.25% is on account of the business mix, basically on API. This quarter, API business clocking around 900 crores. So it comes to the normal position, by which around 1.25% got released. The balance around 1% is on account of the product mix as well as the geographic mix between the various continents. Right? That is the main reason. And we have factored in all the costs at whatever we have been buying. We believe these are all the peak, and probably it may continue for a couple of quarters. And this is the position as on date. And we are trying to see how to improve upon it. Anyway, internally as a process, we work on that continuously.
Okay, so basically, from what I understand, the mix has changed, back to its normal level, and there has been some geographical mix, which has helped margins.
Absolutely, you're right.
Sir, on the API front, have we been able to pass on the cost increases that we've seen in the last few months to our customers, or API margins have come down over the last year?
In terms of the domestic industry, we are able to pass it on, at least some significant portion of it. But for
total sale, 45% of the sale is the in-house formulation sale, transfer to formulation. 55% is the outside. For whatever the 55% of the outside sale is, we are able to do at least 60-70% of the price increases we pass it on. Still we bear some amount. But the in-house one, everything we absorb to the oral division.
Got it, sir. And sir, on the second question on US, there has been some commentary from our peers about, portfolio rationalization. We have seen moderation in the oral solid business, even though injectable is improved. So if you could, one, give us color on what we are seeing on the oral solid business in terms of price erosion. Has it, has been flattish? Has it deteriorated from last quarter? And injectables, how should we look at growth from injectables given, we are now getting, closer to the pre-COVID levels?
The injectable part, my colleague Yugandhar can explain. I can tell about the oral business and other businesses in US. And we saw the price erosion is continuing, and little bit we felt that the Q4 will become there won't be much price erosion, but to our surprise, the Q4 price erosion is average in the whole year it is 9%, and Q3 suppose around 9.5%, and Q4 it is 11.5%. Another 2% was increased in Q4. So the overall impact, because either price erosion or self-stock adjustment, together it is around 11.5%. And only price erosion is in Q4 is around 10%. Between Q3 to Q4, around 2.5% was further erosion, and we are expect this may not stop here, but it may be in slow phase. It may be next 2 quarters. This situation will continue. That is what we are expecting. Okay.
And in terms of the injectables, as you can see, the price erosion continues. It is not that it is injectable businesses doesn't have a price erosion. It does have, but we do have a good portfolio of launches, which is actually will offset some sort of a price decline. And I do expect the growth momentum of injectable business to continue, mainly the specialty business as a overall, both oncology, hormonal, and the general injectables all put together. We do expect a double-digit growth going forward into the next year.
Sorry,
madam. Sorry. Also in the oral business, overall our volume has increased around 6%. We know that the price or the pricing pressure is continuing. There is no end for this, and maybe another 2 quarters. And we have a good number of products, even though it is a medium level products. We won't tell it is a first to file or exclusive products or something. We have 30-40 products. subject to some plant approvals also. So we hope, in coming quarters, after 1 or 2 quarters, things will stabilize in the volume and the price.
Got it. Thank you so much, sir.
Thank you. Anyone who wishes to ask a question may use the raise hand icon on the bottom of your screen. Next question is from Tarang Agarwal.
Hello, good morning. Thank you for taking my questions. 4 from my side. First, between CWIP and intangibles under development, which translates to roughly about 4,000 crores, about 40% of company's net block seems to be on track to be capitalized. Over what period should we see this getting capitalized, and how is management's revenue visibility on these assets?
Out of the 3,000 crores which you are seeing, Tarang, at least 1,500 crores is pertaining to both injectable as well as the oral plant and derma plant in US. And oral and derma likely to be commissioned before FY23 end, and injectable probably may spill over to next year. And in terms of the other things, it is more of a brownfield. Another big one is the AUROCure. AUROCure is the Vizag injectable facility, which the installation is more or less complete, and the exhibit batches will take place. And probably Yugandhar will explain it a little bit more. And other things are more of brownfield expansion, small expansions, etc., which it will get capitalized over the course of time. Right? So, Yugandhar, to talk about the AUROCure?
Yeah, Tarang, you want to ask something else?
Yeah. So would it be fair to presume that over the next 15 to 18 months, we should see a large proportion of that getting capitalized?
Yeah.
Okay.
Tarang, in terms of the injectable plants, we have two new injectable plants, one in Vizag and one in US. And we do expect the filing to start in FY23. And in case if everything goes well, FY24 onwards, we will start generating some revenue from Vizag and New Jersey both. But in worst case, it might spill over to FY25 first quarter.
Okay. The second question to you, Mr. Puvvala, what's the global generic injectable sales for FY22 and the split between North America and others? Second, do you still stick to your earlier guidance of about $650 million by FY24? And if so, can you give us a more calibrated pathway in terms of, number of launches that could help us get there over the next 2 years from this business?
Yeah. Tarang, let me again, I think I did correct last time as well, and I will continue to correct till the time your questions start changing from injectables to specialty. Yes, it is a specialty business, including oncology oral solids, hormonal oral solids, as well as the entire sterile business. That is what it is. And on a pro forma level, we closed around $438 million in FY22. And we expect the double-digit growth to continue into FY23 and 24. And we stick to our guidance of 650 to 700 million by FY24 for the specialty business.
Sure. In terms of number of launches that we could see,
in fact, this year in FY22 we had 11 launches, and in FY23 I expect 15 to 20 launches. And from a filing and launches perspective, our target is 20 filings and 20 launches every year. Okay, that is what is going to be the trajectory.
Got it. And so how should we see the capex intensity of Aurobindo as a whole going forward? I mean, reasonable amount of capacity is created, capital deployed. How should we see that going forward over the next 2-3 years?
Tarang, I'll just take on in terms of the injectable portion of it. I think in injectables, most of the capex has been spent. And as I said, we have 4 commercial plants and 2 plants which are coming up and where already the capex has been spent. Other than the normal general capacity enhancements within the plant, I don't expect significant investment in capacity for the specialty business. Subbu, would you like to take on the other side of the business, please?
Yeah, as Aurobindo as a whole, including the injectable business, we expect around 125 million type of capex. See, already we have got a commitment of around 400 million, including the PLI project, which is the PNG project. So we expect this to be spent over the period of 2 years, right? So we expect other than the PNG project, I don't think we'll be beyond 100 to 125 million. But however, I like Mr. Ramprasad Reddy Garu or Mr. Dityan Reddy Garu to.
There is no much capex we are not seeing in this, and around 250 million to 230, 240 million is the PLI. Balance is 120, 130 is the other 1 or 2 API plants, and in the oral formulation side, there is no much capex. Maybe in US side, in the Puerto Rico, we may require some capex. Otherwise, almost next 2 years, other than the already approved capex, not yet spent, around 375 or so, and it may be another 120 million in the capex side, not more than that.
Got it. Thank you.
It includes the PLI also, around 250 million.
That's the PLI.
Got it. Thank you.
Thank you. Next question is from Mr. Tushar. Yes, Tushar. Okay, we can't hear you, Tushar. We'll take you afterwards. Next question is from Kunal Randeria.
Hi, good morning. So, just on the US price erosion, you did share some numbers. Sir, but would it be possible for you to share some trends on how you are seeing price erosion in orals and injectables?
What is that? Can you repeat?
So the price erosion trends, how do they differ between oral solids and injectable products?
No, I can tell about the oral. My colleague Yugandhar will tell about the injectable. As we told, the last 4 quarters average is around 9%, and last quarter is 11%. But 11% include the shelf stock adjustment and price erosion together. Between the 3rd quarter to 4th quarter, around 2.25% is the price erosion. So such way we expect we expect in a lower terms in next few quarters, and vice versa, the shelf stock also will come along with the price erosion. And already the prices, a lot of depression, lot much is reduced something. Now we are not expecting there is a big, if at all, further price going down. So I don't know how the market will react. Either some people either some of us will drop some products, or some price increases may happen. Anything can happen afterwards.
It is in the similar trajectory. It is in the high single digits, not much different. But yeah, we do have significant launches coming up, so that is what will take care of the future growth. But in terms of the price erosion, it continues to be in the similar range like orals. It is 1% here and there, but it is in the similar levels.
Got it, sir. So just one more. So you are starting to build up a nice cash pile now. But given the challenges in developed markets, does it make sense to keep acquiring there, or are you sort of you could say maybe build a bigger cash pile for some domestic acquisition in future?
The present we are not very much big acquisitions. We want to complete the existing projects. It is because project completion is not the end. That is the beginning. Again, operationally, it has to become break-even and profitable. That will take another 2-3 years. So we have to protect the cash to the existing approved pending projects, as well as the completion of the existing projects, as well as the projects completed, operationally break-even and profitable projects. There are almost 6-7 projects at various stages are there. And like biosimilars, like vaccines and the China plant, and where we are filing the big way, we have a lot of hope, and Puerto Rico plant like that. So we are not going to start any more new plants. That is what we wish in injectable 2 plants, those things.
Sure, sir. So then, we assume that there would be no, big bang acquisition in future, either in US or in India.
Not at all. At least in next 2-3 years, that may not happen.
Sure, sir. Perfect. Thank you very much.
Thank you. Next question is from Surya Patra. Please unmute yourself. Okay, we will take the next one from Kunal Dhamesha.
Good morning, and thanks for taking the question. So the first one on the US price erosion. Have we done any withdrawals from the market? And if yes, how many? If no, what are the some of the key metrics that we look at, and how frequently do we look at our product portfolio, whether to do withdrawals or not?
They are very closely monitoring. As on today, we don't have withdrawn any product. And based on the situation of the next 1 or 2 quarters, we will keep you informed. Anything is there. We hope that situation may not come, because nobody will sell the product under the loss. But we have seen few examples. Less than the cost of production means less than the plant cost. Also, we are not able to cover in few products. So in such scenario, drop may happen, but as on today, such scenario is not there.
Sure. And second question, when we now say that our injectable business is basically specialty business, so even the biosimilar part will be included in that specialty business. Is that the way to think about it?
No, biosimilar is an independent business. Biosimilar and vaccine is an independent business.
Okay, sure. Thank you.
Thank you. The next question is from Surya Patra. Yes, Mr. Surya, can you just unmute? Yeah. I think there is an issue with your mic. We'll take the next one. Next question is from Vishal Manchanda.
Thanks for the opportunity. Can you talk about the capacity utilization for your oral solid manufacturing units at a consolidated level?
Yeah. No, we don't, still in US plants, nothing was started production anyhow. US, we have in the Dayton, New Jersey, new block, B block is the oral plant that is going to start production in the end of this year. And and dermatology and MDIs and patches is the plant which we are starting. We already started filing in a few products, and some more products we are filing before 31st March, and consequently, and the Puerto Rico one we are doing approximately in 2023, and we will start our products. Overall, in the capacity utilization in the majority, I can tell you, oral plants approximately 70% of in the India side, 70% of the capacity we have achieved. Because I don't know the injectable, the Yugandhar can tell my colleague. Otherwise, overall it is 68 to 70% in Indian formulation plants.
So the point is, like, unless we kind of reach to full capacity utilization, we won't be thinking about dropping products which are unprofitable at the including overhead. So basically, you would continue to manufacture as long as they cover the fixed costs, and that would keep the prices low, basically.
No, you see, the question of dropping, there is no connection between the capacity and the dropping the products, because still we have good amount of capacity. Another 20% we can, and we may not fill up at least in next 1-2 years this in the capacity side, because in the afterwards we are getting our Puerto Rico plant coming into the hand. So I don't think, once we lost the margins are come down, then only we will take that extreme step. But we are not expecting that. Anyhow, we will continue wherever there is a positive contribution. As long as the positive contribution is there, we will continue. But we are losing, then definitely we will do. We will keep you informed every quarter. As on today, that situation we have not come across. Maybe few strengths and few SKUs maybe. But but if it is the same way, around 11% next year, also 10-11% was the price erosion, then definitely will happen. Price drop, product drop.
So on R&D, do we FY23 would this be around 7 point? So we are at 7.5% ballpark of sales this quarter. Would we be at the same levels for FY23?
I think FY23 going forward, no, because this quarter is a very peak quarter in, throughout the Aurobindo's tenure. I think going forward, we may not be having this much of percentage. It will be anywhere between, we expect around 6% type is what we are expecting.
Okay. And any color on the ARV business? So will that some bounce back to the FY21 levels?
No. What, Chandreddy?
So at this juncture, we expect the business to be maintained at the same level. We will strive towards the improvement. There is no much. We will maintain the same level. Whatever the last quarter is there, here and there, we will maintain the same level.
Okay. And on the PenG facility that you are putting up, is this would your customers need to kind of switch the supplier in their DMF files to procure from you, or they can directly start procuring without any changes in their file?
In the antibiotics, the DMF, regulatory quantity very minuscule, not much. Maybe CEP Europe or something they may change. And we are not much, initially we are not going to file the DMF, US DMF from that plant.
What I mean, so you won't be looking at the US markets?
No, that is very small. It's 5% or 3% of the capacity of the plant is US market.
Okay. And so the customers who might be procuring from China, they can directly switch to your product without any lag, basically. So would this require some regulatory process for someone to change their source?
Very minimal regulatory changes. We are not expecting any big change. There may not be a requirement.
Okay. Got it. Thank you. That's all from my side.
Thank you.
Thank you. Next question is from Nishit Shah.
Hello. Can you hear me?
Yes.
Yeah, congratulations on a very good set of numbers when I compare with some of the peers, especially who are operating in the US market. So first of all, congratulations, Mr. Reddy and his team for a splendid set of numbers. My first question is, which I have been asking for almost last 2 years, what is the status on the depot injections? Are we now at the stage of filing, or what is the status there?
Nishid, we are at least 1 year away from filing. We will be doing the exhibits sometime in FY23 for all the depot products, and depending on bio studies and other stuff, it will be an FY24 filing in the best case.
So I want to know the reasons for the delay, because this actually I go back to the 2-year transcript also. It was supposed to be done in 1 year's time. So what has led to the delay, and why we are every time talking about 1 year later?
Nishid, if it would have been so simple, everyone would have filed it, na? Okay. So obviously it is complex. Nishid, let me just finish. It is complex. When we take batches, we do see some issues and we redo the batches. And so it is a journey of continuous improvement in depot products. It's not a simple, straightforward development and execution. We might have felt that yes, we have cracked it and we are ready to take the batches, and we have taken batches. When we find some issues, we do redo the batches. So now we feel more than 90% confident that whatever we'll be taking in FY23 will give us good set of results, and that is when we will start the bio studies for these products. And this is what is our best guesstimate at this point of time, Nishid. Again, I might have a different answer 6 months down the line or 12 months down the line. Okay, but these are complex products.
So Yugandhar, the issue, why I'm again raising this issue is that some of the large peers in India have failed to do this product. That is why it is important to elaborate and explain. If you are able to do it, then it is a very big milestone. So that is why I am again asking that, are we now closer, and how confident we are on doing this?
See, I think we are closer than before, and we are more than 80% confident at this point of time. But in these complex injectables, unless you fully succeed, the success cannot be announced. The reason is they are complex.
Okay, appreciate this. Now the second question is to Mr. Reddy on the. We have heard it in the press, and we have seen several reports that we are trying to restructure the injectable business and bring in partners in this business. What is the status on that? If you can elaborate to the extent you can elaborate on this subject.
At this point, my colleague, Mr. Subramaniam, will inform, because he had a better rehearsal on this. You can, Subbu, can you explain?
Yeah. So Nishid bhai, this we had the COID as met and then evaluated options and then appointed advisors who will be guiding them through the restructuring process. And when we reach a requisite stage that deserves to be announced, we will certainly do that. See, the evaluation process in today's context is very volatile environment, and they are taking into consideration all the material aspects and also taking cognizance of the current environment. So it is being under process, Nishid bhai, and the business is not looking, the business, irrespective of the restructuring or not, the business is committed to achieve that, and that's what Yugandhar has just a few minutes back explained actually. Okay?
Thank you very much. Thanks a lot. That's all from my side.
Thank you, Nishid.
Next question is from Nitin Agarwal.
Hello. Sir, my question is on the margins. So the margins have come off a fair bit in this quarter. So how should we look at a margin improvement from these levels as we go through the next couple of years? What are the levers for margin improvement for us, and can we go back to the earlier levels that we've done in FY 2021?
cannot tell at least the next 2 quarters where we are, and we want at least another 2 quarters to answer your question, because margins are still, in some areas it is falling, some areas it is stable, and very few areas it is increasing. And we are waiting and see where how the things will change in next 1 or 2 quarters. So we can tell a better answer after 2 quarters. After a quarter or 2.
And sir, on that point, in the past, you were expecting that the inventory liquidation process will get over by Q3. Obviously, this has not happened, and pricing erosion will sort of reverse. But what has led to this? Has two things. One is the inventory liquidation still going on? And if it is stopped, then what else is driving the price drops then?
As far as the oral products, we are hearing from the distributors and all that. Their inventory also come to the normal level, and also the US companies warehouse, their inventory also came normal level, because it is already 1 year, 1.5 years. So either it will become normal level or it is expired and restricted. So where the issue is there, the huge stocks of API and intermediates in some products. So those things has to become normal in some areas, because otherwise that will impact in especially those products, the basic API intermediates. Other than that, majority of the stock issue as a past. That is what I feel. And we are hearing the same thing from in wholesalers also.
Okay, sir. And so lastly, can you probably just help us understand what is happening in the vaccine business, and what's outlook for the vaccine business, especially the pneumococcal vaccine? How should we look at that?
Satakarni?
Yeah. So, Nitin, in terms of our vaccine business and the bacterial vaccine that you have spoken about, we have concluded a phase 3+0 trial in India. And we are in the process of analyzing the clinical samples. We will be able to provide more commentary on this program once we complete the clinical analysis and initiate the regulatory process in India. In all likelihood, the regulatory process in India will be initiated in Q3, Q4 of this year. In terms of the other vaccines, they're at an early stage of development. With one viral vaccine, potentially, I would not say animal study, but potentially moving forward to a proof of concept stage, preclinical, and then moving to a possible phase 1 in the Q4 of this fiscal year.
Okay, thank you.
Thank you. Next question is from Kaushik Podar.
Yeah, you had announced your foray into the domestic formulation. I mean, what is the status of that, and what are the future plans for the next 3 to 5 years?
No, the domestic one, we are completing the transaction. The integration is we just in last 1 or 2 days only. The transaction has come.
The transaction is in the closure, and we have been integrating all the people, etc.
We are integrating this last week only. We have closure and the integrating. First, let us stabilize the existing and study the whole thing. Then we can take some decision what to do the next stage.
Okay. Thank you.
Thank you. Next question is from Tushar Manudhane.
Am I audible now?
Yes.
Yeah.
Yeah, thanks for the opportunity. So just from the inventory part, there has been significant reduction in the inventory over the past 6 months. And considering that the raw material prices have been on the rise at the same time, so how do you look at it for next couple of quarters on the raw material side in particular?
Tushar, I mean, we explained we have been focusing on the inventory if you recollect, in the August call itself, and we are significantly reduced in the last 2 years. And given the nature of the prices going up and the availability of stocks, right, etc., we may not be reducing anything significant going forward. Apart from that, the value of the materials itself has gone up. So whatever we are maintaining is equivalent to at least 1.1 times or 1.2 times of what we have been holding it previously. So we may not be doing anything significant reduction going forward.
Okay, sir. That helps. Thank you.
Next question is from Tarang Agarwal.
I just wanted to get a sense on Dr. Satkarni on the biosimilars business. If there is an update, if you could give us an update there. And second, on the bacterial vaccine, you said that the regulatory process submission should start from Q3, Q4. If it were to happen, how should we then anticipate the eventual launch of the vaccine in terms of timelines?
It's a good question. So I'll start with answering the part one of your question related to the biosimilars. In the Q4 of the last fiscal, our second oncology biosimilar has been filed with the EMEA, which is as per expectation. We are having 3 more biosimilars, out of which 2 of them are oncology biosimilars at different stages of our phase 3 large licensure clinical trials. One of the oncology biosimilars, we should be completing our 600 plus metastatic cancer patient recruitment probably in a month or 2, which positions us to evaluate the efficacy and safety of this product potentially by Q4, which then leads to a series of filings in regulated and semi-regulated countries in Q4 2023 or starting Q1 of the next fiscal year. What is also important to note in terms of our biosimilars, for some of you following the business closely, is that, as you know, that we are stronger in our pipeline with oncology and immunology biosimilars. An interesting update for all of you would be, right now our focus has been on oncology, but we have advanced one of our very important immunology assets into phase 1 clinical trial in Australia and New Zealand in the Q4 of the last fiscal year, with the potential of it moving into a global phase 3 immunology trial by Q3, Q4 of this year, which means that we will be probably in the top 3 to take this product by 24-25 with a $4 billion potential market opportunity when it opens up in Europe and US. So we remain on track with the development of other biosimilars in our pipeline, and I'm quite excited with the sort of development we are seeing and the progress we are seeing in the biosimilar space. Does that answer your first question?
Yes, sir. Just a follow-up on that. As you said, 3 more biosims oncology in different stages of phase 3, one of which you should probably get some evaluation done by Q3, Q4. What about the balance 2 in terms of how should we see you actually filing for these products in terms of timelines?
So out of the 3 biosimilars which are in global phase 3 clinical trials, 2 of them are oncology assets. The first oncology assets I have given you guidance on when we are expecting the data review to happen and the filing procedure to begin with. The second oncology biosimilar is also in a global phase 3 trial right now. We expect the filing to be towards Q4 of the next fiscal year, which essentially means that we expect the large trial to take some time to conclude. But having said that, we are discussing with certain regulatory agencies on the basis of our clinical data accumulated so far. We wanted to approach and push the regulatory barriers and file it with a bridged clinical pathway. And when that happens, we will provide you guidance on what's happening on that product. But expect it to be filed towards the late 2023 or early 2024 because the nature of these clinical trials are very extensive and take longer duration. With respect to our third biosimilar, which is in a phase 3 global trial, we have just begun recruiting subjects and dosing them in the last quarter, in the Q4 of the last fiscal. It's a shorter clinical trial. We expect the clinical trial to conclude in 23-24 with an expectation of filing either in Q4 23-24 or if things go well, maybe the filing procedures might start as early as Q3. But again, as you know, the business of biosimilars, we had COVID headwinds over the last 1.5 to 2 years. A major COVID headwind is on the clinical recruitment rate and the site preparedness. So that caused delay not just to us, but across the clinical trials of biologics and biosimilars players.
Got it. This answers my first question.
Can you take me through the second question one more time?
In case of your bacterial vaccine, you suggested that the regulatory filing should probably start by Q3, Q4 of FY23, depending on the analysis of phase 3. If that were to happen, typically how much time would this process take, and how should we see that product actually coming to market if all goes well?
Okay, so we are currently in the final leg of analyzing our phase 3 licensure trial samples with the bacterial vaccine. So we look forward to reporting the pivotal clinical data in Q3 of this fiscal, leading to necessary submission requirements to the Indian authorities either Q3 or Q4 of this fiscal year. Now, what this means is there's a queuing procedure with the regulatory agencies, and if the queuing procedure is 3 months, leading to a review from the regulatory authority in India, then it would take another 3 months to have a final approval on this product. If the queuing procedure is, say, 4 weeks or 6 weeks, then the review procedure is again 90 to 120 days. So we are looking at a window of anywhere 4 to 6 or 4 to 7 months before the final approval happens. So in 2023 Q1, I expect, if everything goes well, Q1 would be a potential launch into the Indian market if all the procedures go well at the best possible speed that we expect it to.
Got it. Thank you.
Thank you. Next question is from Shyam Srinivasan.
Yeah, hi, good morning, and thank you for taking my question. Just wanted some update on the Europe business. We have seen it come off sequentially. So just, and you know, what's the kind of outlook here? How are you looking at the different markets, even from a price erosion or a tender perspective? If you could share something on the Europe business, please.
Europe business is a very stable, but in 1 or 2 countries where we bought the Apotex licenses, we took a decision to write off those products. So that actually made some provision. It became a little more provision than normal. So that is what it was. Some extent it went in some this is the 1 or 2 Eastern European countries. They're not doing well from the beginning when we bought the Apotex. These all Apotex licenses. So finally we took the decision to write off the stocks and all these things. We hope the business is stability in the existing level of 11% is not an issue, but we are working very hard. There are many products we are going to file, and we are hoping the reaching the 15% is a lot of people. We are all working very hard to improve from 10-11% to 14-15%.
Okay. Arpesa, so how many of our products have been moved to the Vizag plant, if I recollect, and you know, so and do we think fiscal 23 it's possible to reach this mid-teens EBITDA margin?
Yeah, it's simply changing that because we can change up to some extent only. We have to change another 20-30 products, but still around 38% of the products will continue to be in Europe. There is no point in changing those products because of the volume and all these things. But the newer products where we filed around 65 products, we expect some, and because each country there are each product there are 2 to 4 countries. So those things it comes. Then the Vizag plant also. Now Vizag plant we are doing around 325 million tablets or capsules per month, and we will reach next year to another 100 million. Then we are confident this our EBITDA has to increase in the Europe.
Got it. Helpful. Second question is a little bit more philosophical. Aurobindo is always known to be a manufacturing powerhouse. So if I were to step back and look at your manufacturing footprint now, it's quite well diversified. I'm unable to get a specific message. So for example, when we closed down a recent plant in the US, the New Jersey area, you're talking about the Puerto Rico plant. So is there some unified vision in terms of, will we continue to divest certain non-performing plants versus open new, and are we optimum there? I know you gave some sense about the utilization levels, but just from an overall perspective, are we done in terms of how our footprint should look, or is there more divestments, stoppages?
No, because we already covered in India plants around 70%. And because there are so many products, because where we bought some ANDAs and some of the filed products. So all these things comes as a safe side. We kept recently we bought the Puerto Rico. Otherwise, the New Jersey plant where we closed down, that we have not closed because of the leakage in the roof, where it is a 50 years old plant. And in the recent typhoon, there is a lost 1 year back. So these leakages are there in 1 or 2 places continuously. We are not able to control. So we are removing the floor and we are reflooring the thing. That is the reason we stopped this one, because that will take around 8-9 months. So in the same area, we have a B block that will be ready in December. There we will do around our 21 products of C2 products that we are going to manufacture one after other something. Other than that, we don't have any intention to expand in the oral side, at least next 3 years.
Got it. Last question. I know you didn't share any guidance at the start, but our PR Saran team, if there is some way we could think about the revenue growth going forward. So we have had a flattish kind of a year this year, but when is there likely to be a step change in growth? When can we likely see double-digit growth for Aurobindo?
We can see the other divisions or other plants or something. It will take another 2 to 4 quarters.
Sir, so given that your earlier comments on price erosion being high for the next 2 quarters are where the visibility is lowest, and then...
Yeah, I am not told price erosion is high. Maybe there is a possibility, because I cannot tell that there is no price erosion. We felt in this 4th quarter there is no much price erosion, but the actual thing happened other way around. It happened. So let us wait and see. That is, we are taking a chance. We are taking a reasonable margin. Next to 1 to 3 quarters, it will go how it will change.
Got it, sir. All the best.
Thank you, sir.
Thank you. We will take the last question from Vikas Sharda. Vikas, please unmute yourself.
Yeah, hi. Thanks for the opportunity. I have one question on the specialty business, that for the full year, how does the margin profile looks like? Like suppose if the full year margins are 18.5% for the company, how would you split it, say, between specialty and non-specialty?
I think it's at a pro forma level, but in terms of the gross margins, we continue to be in the 65 to 70%, and in terms of EBITDA, it will be around 35 to 40. But it is still at a pro forma level, not as a specific set of numbers, but that is what is going to be the range.
Understand. So just a follow-up to Mr. Subbu then I mean, when you look at the overall ROE of the company, say in the mid-teens, and then, I mean, the non-specialty business, I mean, what kind of returns does it make? And how would you look at that business in terms of return profiles?
Because just now Satkarni has explained, we have a great future from the biosimilar business, which is expected to deliver well. Even if the specialty business is, without the specialty business also, the biosimilars will step in and improve the overall ROE.
Understood. Okay. Thank you.
Thank you, sir.
Thank you. I would now like to hand the conference over to Ms. Dipti Thakur for closing comments.
Thank you all for joining us on the call today. If you have any of your questions unanswered, please feel free to keep in touch with Investor Relations team. The transcript of this call will be uploaded on our website, www.aurobindo.com, in due course. Thank you and have a great day.
Thank you. On behalf of Aurobindo Pharma Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.